Hi, I'm Dave. It's Monday, January 13th, and Tesla stock is exploding this morning. Right now, it's currently at $5.15 a share and already up about $35, $36 just in a day. And people all over are clamoring, trying to understand what's going on, and there's a lot of confusion. And I want to share my explanation of what's going on with Tesla stock. So this morning, my friend gives me a call at about 8 a.m. in the morning, and he's like, Dave, what's going on? I'm like, obviously I know what's going on. He's calling about Tesla stock, just broke 500, and he's confused. So I casually say, hey, what are you talking about? And he's like, Dave, Tesla stock is over 500. I don't understand. What's going on? And I think there's a lot of confusion out there around Tesla stock. Why it's broken 400 quickly, why it's breaking 500 quickly, what's going on? It's doubled, it's almost tripled since just, 8 months ago. And I think one of the big reasons is people are so focused on the short-term news cycle. And there's so much misunderstanding around Tesla and fantastic, I think, high-growth companies. In terms of Tesla, for example, today there was an analyst, Colin Rush, who upgraded his price target from like 385 to like 610 or so. And now people are saying, oh, that's the reason for this big move, right? But I don't think so, because think about it. An analyst upgrade usually doesn't lead to a 35 to 40 point increase in Tesla stock price. That's kind of ridiculous. There are bigger factors going on in today's price move, and it's a part of a bigger story of Tesla's kind of rise in the past 7-8 months. I want to share with you how Tesla got here and how I explain and reason Tesla's story from here. So first of all, in order to understand how Tesla got here, you have to understand the big hole that Tesla dug itself in last year. And we have to go back to 2018, where we have a long series of tweets by Elon Musk that reduced his credibility. You have some production delays and for Model 3 in terms of ramping the production. And the big kind of hole that Tesla dug himself in was Elon promised that Q1 of 2019 would be profitable and every quarter after that. And then he kind of backtracked. And then what happened was there was a huge loss in Q1, and it was unexpected by most people. The reason for there was a big loss was several factors. One, there was seasonality. The federal tax credits expired. Model 3 deliveries were very low compared to last quarter. And then one of the biggest things that people kind of don't understand is the Model S and X sales tanked to like 12 or 13,000 versus 23, 24,000 the quarter before. And one of the reasons that happened was because Elon Musk decided to pull the standard range version of the Model S and X early in Q1. Now, I heard from some people in Tesla that some people were confused about this because the standard range version was actually more than half of the sales for Model S and X. And so a lot of people knew that when they pulled the standard range versions, that Model S and X sales would tank. But Elon, for some reason, decided to do it. And what we saw in Q1 was accumulation of all these decisions put together, which led to a huge Q1 loss, and it kind of broke a lot of credibility that Elon had with some people. You had T. Rowe Price, one of the biggest holders of Tesla stock, liquidate almost their entire position at the end of 2018 and beginning of 2019. You saw the stock price just continue to crash. It broke 300, it broke 250, it broke 220, it broke 200, even broke 180, and it got down to as low as 176. Q2 actually also had a big loss of about $400 million. Things were improving slightly, but Tesla was going through restructuring costs, and there wasn't a clear kind of light at the end of the tunnel. For most people, they had resolved to look to Model Y to be the car and the vehicle that would turn Tesla profitable. You see, the story before that was Model 3 was going to become the turning point where Tesla would become profitable after that point. But with Q1 and Q2 of 2019, that whole story kind of got demolished and people were left kind of scratching their head. What happened was in Q3 of last year, there was a major turning point. And basically Tesla delivered more Model 3s. They kind of recovered a lot of the S and X demand. And they also realized a lot of the operating expense reductions from previous quarters. And what you saw was Tesla actually became a lean, mean, profitable machine with just Model Y or Model 3, S and X sales. And so it basically restored the whole story that Model 3 was going to make Tesla profitable. Now here's why this is important. Once Tesla becomes profitable with just Model 3, S, and X, every vehicle lineup in addition to that becomes incremental income just added to their net profit. And the reason why is because Tesla is a very highly leveraged company where they have high fixed costs, where their operating costs are close to $1 billion per quarter. But their operating costs don't really, or operating expenses, let's say, don't really change even if they make one car or if they make 5 lineups of cars. It's because their operating expenses are mainly research and development, it's their engineers, it's their sales staff, etc. The cost to actually build each car doesn't go into the operating expenses. It goes into their cost of goods line item, which is factored into gross profit. So for example, when Model Y rolls out and they need to hire a bunch of workers to assemble the Model Y, that cost doesn't go into their operating expenses. It basically goes into their cost of goods, which you subtract from their revenue to get basically your gross profit. And so what Tesla has is it has an amazing amount of operating leverage once it covers the operating expenses that it has, which is about $1 billion per quarter. And Q3 showed that. Q3 basically said, hey, our $1 billion in operating expenses is covered by current Model 3, S, and X. We're done. We're sustainably profitable from here on out. And the sentiment changed. And in my last video, my previous video, it said Tesla breaks 400. I don't care. In that video, I kind of share my hypothesis, which I said there was a big shift in sentiment from some huge big buyers or hedge funds, funds in Wall Street. And I know that because there was a significant increase, not just in the stock price, but the change in media and change in sentiment. Also, if you take Jim Cramer, who's, I believe, an ultimate kind of follower in a lot of these things, his lingo started to change regarding Tesla. He became a big bull. I think mostly because he has friends on Wall Street that started to change their attitude toward Tesla, and he just basically copies that. And so you have this big shift after Q3. And it's moving the stock above 400, and people are anticipating what's going to happen next. Then you have Q4 deliveries come out. It's better than expected. And what basically it means is that Tesla is going to be able to deliver better profits, more profits in Q3 because they're selling more cars than they did in Q3. So Q4 is probably going to be, my guess is around $300 million in net profit, which is going to surprise a lot of people. And what that does is if you combine the 150 or so million in net profit in Q3 with the 300 or so in Q4 that I expect, that's about $450 million. In Q2 of the previous quarter, they lost, I think, about 438 million or so. And so you have, over those 3 quarters, it's actually break even or slightly profitable. Here's what it means. It means that in Q1, Tesla has a very, very good chance of joining the S&P 500. The requirements to join the S&P 500, watch my video on just that. I kind of share just about the S&P 500 in that video. But basically, you need the cumulative profit of the past 4 quarters needs to be positive. And then also the last quarter needs to be positive profit. So in Q1 of this year, if Tesla can eke out just 1 cent profit, right? And it's very possible that actually Tesla can be eligible for the S&P 500. And if they're eligible, I believe that it'll be very quick process for Tesla to be accepted and entered in the S&P 500. What does that mean? Who cares? Well, typically, if you look at some studies, if the stock gets added to the S&P 500, there's a gain of typically 5 to 8% or so. The reason being is there's so much money that is indexed or tracking the S&P 500 that once a stock joins the S&P 500, all of these funds basically need to add and buy Tesla as they track the S&P 500. Now, there are trillions and trillions of dollars that are tracking the S&P 500. So this is actually a huge amount of money that is going to be pouring into Tesla stock. And this is part of the excitement and the mood shift around Tesla. Now, one other question that people have is, like, isn't the valuation though kind of high? Like, there's a bunch of headlines like Tesla's worth more than Ford and GM put together. And how can that be? Or Tesla's approaching, eventually they'll approach VW valuation. I think they'll pass them eventually. And people are wondering, is that even possible? Look at the revenue, right? GM, Ford, VW sells so much more cars than Tesla. They make much more money than Tesla, most of them. And there's this kind of fear that, oh my gosh, this is a bubble, right? How can Tesla own up to this valuation? Now, I have a few kind of responses for this. First, Tesla really is just getting started. After they have achieved the sustainable profitability with just Model 3, S, and X, everything after that is just incremental income added. For example, take China. If Tesla is able to deliver 100,000 vehicles at $40,000 ASP in basically average sales price in China, that's basically $4 billion in added revenue. If you take a 20% gross margin or so, that's about $800 million in profit. So basically what you're looking at is an added net profit of $800 million in 2020 just from 100,000 cars made in China, which is remarkable. And then if you take Model Y, for example, this year if they sell 100,000 Model Ys, let's say at $50,000 ASP, average sales price, that's $5 billion in added revenue. If you conservatively say 20% gross margin, that's basically $1 billion in added profit. And most of this added gross profit will go directly into net profit because their operating expenses aren't going to increase that much with added lineups of cars. So think about that. You have in China $800 million in basically profit added this year in 2020. In Model Y, if they reach 100,000, you have another $1 billion in profit. That's almost $2 billion in incremental profit just from China and Model Y this year without really full production. Now think about 2021. If Tesla can make 400,000 Model Ys at $50,000 average sales price, that's $20 billion in revenue. Conservatively, 20% gross margin, which I think is too low, but let's say it is. That's $4 billion in profit. That's basically an extra $1 billion in profit every single quarter. And there's potential for Tesla to make $5 billion, I think, in 2021. Now, I'm not going to say that. I'm not going to guarantee it because there's always hiccups. And a lot of it depends on execution, on how fast they want to grow, how fast they want to, invest into increasing their headcount, etc. But at $5 billion profit in 2021, if you give it a 40 times multiple, because they're growing fast, that could be actually a $200 billion market cap company. And that's why Tesla at under $100 billion, I'm not fretting, Yeah, it could go up and down, but it's like, look at a year or 2 or 3 years out, and if you calculate the numbers, you're going to see it. And it all depends obviously on execution. None of this is risk-free. There's always risk. And Tesla has proven to have a lot of hiccups in its execution at times. But what I'm saying is that if you look at a couple years ago, a couple years ahead, if execution is done well, you're looking at a company that can be very, very, very profitable. And the market will likely give it a very high market cap valuation. And that's one of the big stories that's going on here. This is why there's a lot of buying pressure in Tesla right now. It's because people are starting to realize, hey, wait a minute, if Tesla is sustainably profitable right now with Model 3, S, and X, what's going to happen with China Model 3? What's going to happen with Model Y in the US? What's going to happen with Model Y in China? Right? And this is not even factoring in or thinking about the Europe gigafactory that they're starting to build. If you add all these numbers, right, Tesla is just primed for a lot of growth. The second thing that I think is very important to look at in this bigger picture is that Tesla really has no competition at this point. Now, I'm not just talking about electric vehicles per se, because I don't think there's a single electric vehicle on the market that's really dominating their ICE counterparts. And here's what I mean. I don't think electric vehicles and ICE vehicles are actually two different markets. I think it's one market. It's just one car market. There's a person, for example, who's shopping from a $40,000 to $60,000 price range, and let's say they want a sedan or a sports sedan, $40,000 to $60,000. I don't think there's a separate per se, EV market and ICE market. I think it's just one market there in the bigger picture. And the way that Tesla approaches a new market is They say we're going to go into a market and create a product that's significantly better than any other product in that market. So with the $40,000 to $60,000 entry kind of mid-level sports sedan market, the best player that they saw was basically the Model 3, or not the Model, the BMW 3 Series. And they said, we're going to build a car that's better, significantly better than the BMW 3 Series. And what Tesla did is they built a car that's significantly better, that wipes out the BMW 3 Series. I'm going to have another video probably later this week or next week that talks about why I think Tesla is just wiping out the competition. But that's why Tesla Model 3 sales are just skyrocketing and crushing the competition, is because their car is just so much better, regardless if it's electric or not. The problem is with companies like BMW, Mercedes, or any other company out there, is that in order for them to beat Tesla, they need to create, for example, in that $40,000 to $60,000 sedan market, they need to create a car that's significantly better than their best 3 Series car in that market. But in order for BMW to create a car that's significantly better, right, in so many ways compared to their current 3 Series car at the same price, it's going to be extremely difficult. I'm not going to say it's impossible, but at least in the next 5 years, I think it's going to be near impossible for BMW to be able to do that. And until they do so, they have no chance against Tesla, because Tesla's product is just far superior. And that's why Tesla is dominating every market that they enter. The Model S just dominated the large sedan, right, premium market. The Model X, right, dominated the luxury kind of, SUV kind of high-end market. The Model 3 is dominating this luxury entry-level sedan market. And the Model Y is going to dominate, right, the comparative crossover SUV market around $40,000 to $60,000, $70,000. All Tesla needs to do is continue to execute their strategy. They just need to come up with new lines of cars, for example, Cybertruck, but also maybe a smaller sedan or different types of cars, and line up to expand their market and do the same strategy where they create a car or SUV that's better, significantly better than the best car in that price range. The only company that's doing this strategy is Tesla. And the only company that's been successful to do this strategy in recent years is Tesla. And that's why Tesla is the only car company really to beat. They're the only car company that's building momentum. They're the only car company that's really building or winning new segments, markets. And for Tesla, it's their game to lose. And this is why I think the 2020s is kind of like a decade for Tesla. I look at kind of like Apple stock and Amazon stock in the 2010s, right? These were remarkable runs by these kind of huge consumer brands that everyone knows about. I think what we're seeing with Tesla is kind of something similar in the 2020s. You're seeing this breakout brand that's expanding and just growing and just continue to execute what they've always been executing, which is creating far superior products, right, in more and more markets and expanding their footprint. So this morning I told my friend, hey, Tesla, it's their market to lose, right? And it's like owning, Apple or Amazon in the 2010s. It's like, you don't really, I think, in my opinion, like I don't think the wise thing to do is just be so focused on the short-term news cycle that you're tempted to sell when it goes up and when it goes, and it's so emotional of a ride. For me, I look at it as, hey, take a step back. Focus on, is this company executing? Is this company becoming dominant in the markets that it serves? Is this company, expanding into new markets? Look at the product itself. How good are their cars, right? What do people think about the Model 3? How is it compared to comparable cars in that market segment in the same price point? And once you start to see this, you'll say, oh my gosh, Tesla is like light years ahead of anyone else out there in the car market. And then you factor in autonomous driving, right? This is a whole new market that's going to unlock potentially, hundreds and hundreds of billions of dollars for Tesla if they can get it right. Again, it's all up to execution, like if they can get this right. But there's so much potential behind this company. I think it's not a company that you try necessarily to trade unless you're a fantastic short-term trader, and there are some of those people. But I think the way you approach Tesla is more of a long-term perspective, and you say, hey, over 10 or 15 years, right, this company can probably far outgrow and outdo what we can imagine in a company if they continue to grow in their markets that they serve. So anyways, Tesla over 500, do I care? Well, I don't really care about the short-term price movements, because my stock holdings have a very low kind of average price I've purchased them. And I don't really try to look at the value of my stock portfolio, partly because it's kind of mentals me, and I kind of just look at that as something that's very just fluctuating so much. Plus there's taxes involved, and then there's always could be a market dip or recession. So I don't even count on the valuation. What I focus on is, is the company executing? Is it dominating its markets? Over the next decade, is it going to become just an incredibly dominant player that's just continuing to execute well? And all of those kind of core questions I ask is what I focus on. Even if the stock is at $500 or $200 or if it jumps to $1,000, I'm still looking ahead. And on top of that, I have my own price targets. Right? I have my expectations of what Tesla's going to sell next year, in 2 years, in 3 years, in 5 years, in 10 years. And I have expectations on what market cap the market's going to give Tesla based upon different multiples that I've calculated. So all of this kind of allows me to take my own independent seat in analyzing Tesla and in kind of writing what I think is one of the best stocks, not just of the past 10 years, but of the next 10 years. In terms of, I always get these questions like, should I buy now or should I buy later? I'm not really interested in timing and in terms of helping people kind of like get in and out of Tesla, etc. My whole focus is I'm trying to help people on this investment channel take a bigger picture, to see things more objectively, to see things before other people. So if you followed me actually previously, before YouTube, I was a prolific kind of avid writer on this site called Tesla Forum, Tesla Motors Club. I had my own thread going on called Dave T articles and mega thread. And I basically for several years, shared my thoughts on Tesla, from 2012 all the way till a couple years ago. And I kind of shared kind of a lot of the foundational pieces of why I thought Tesla was going to be a mega company that's going to disrupt the auto industry. And I think that's kind of the point of this channel. I'm not trying to just join the bandwagon in 2020 saying, oh, Tesla, Tesla, whatever. What I'm trying to do is say, hey, let's try to see things before other people. Let's try to understand Tesla in 2012, in 2013, in 2014, early on. What's the potential? What's the pros? What's the cons? What are the challenges ahead? And even as I kind of look at Tesla in 2020, what I'm doing is I'm looking out with Tesla for the next 10 years. Most people, they're looking at Tesla over the next like 6 months or 12 months or short term. And I'm saying, hey, what are the challenges ahead for Tesla in the next 10 years? What advantages do they bring? And what are their challenges? And how can we evaluate this in a way? Does Tesla have a huge growth opportunity ahead or not? And what are their probabilities of success? And I'm doing this not just with Tesla, but this is kind of a process I do for other investment opportunities as well. And I think it's something that isn't taught very well, and it isn't modeled very well in other places. And that's kind of the reason for this channel. I'm not able to find really many places that have this kind of perspective, where they go deep into kind of an investment or perspective and really kind of understand it way before other people, especially these big kind of opportunity stocks like Tesla. Anyways, please go ahead and subscribe. And I think that helps out a lot. Hit the like button, that helps as well. And please go ahead and share this video if it's been helpful for you with other people. Go to Reddit, post it on some subreddits, post it on Facebook groups, post it on some forums, and share it with your friends. That's going to help a lot to get the word out on this channel. Anyways, good luck, and we'll talk to you guys later.